Every time you finance equipment, land, seed, or expansion, the loan becomes a liability on your balance sheet. At the same time, it becomes an asset on the bank's balance sheet. Same contract, same signature, two completely different outcomes. Last week, we talked about good debt versus bad debt. Debt itself isn't the problem. The issue is control. Who benefits from it? Who structures it? Who captures the interest flow? Today, we're asking a deeper question. What happens if your farm had its own banking system? Not hypothetically, but just practically. We're going to talk about the infinite banking composite. What is it? What it isn't? And whether it actually makes sense for farmers. Welcome back to today's episode 23, Farmers in Finance over here. I am Rico, your host, and today we're going to explain the infinite banking system. If you're watching this for the first time, welcome. Please do subscribe. I'm on multiple channels, Facebook, YouTube, and LinkedIn. I am live right now, but in the future, if you watch this, we talk about finances mainly for farmers, as I was a former farmer myself. Um, and what I'm trying to do with this channel is educate people on different financial tactics, planning, estates, and insurance, and wills, and everything like that. So if you like this channel, give it a thumbs up and continue watching, because I'll put out content that helps understanding uh, the financial uh, journey that we're all in. So thank you for watching. Like I said, last week we talked a little bit about debt and what's good debt and bad debt. And at the end, I still have the checklist. If you want to download it, just send me a DM or a message, and I'll give you a checklist of how to determine if this debt that you're taking on is a good debt or a bad debt. But having said that, there's also the fact that um, if you practice properly your own banking system, you can turn bad debt in a good debt, and actually gain more income, and more retain more of your money, your hard-earned dollars. And we all know that farmers work a lot, and they're the essential key component of this society. Without food, well, good luck. You probably survive a month, if so. If you're properly trained, maybe a couple more days. But um, having said that, the system needs to stay continuous and prosperous for farmers too, because we're seeing a huge exit, and obviously technology is helping out a lot of farmers and making it easier for them to farm. But again, it's also knowing the tools that are required to farm, and farmers are like, they have a broad spectrum of understanding, so they can also well, they can, and they have to also know all different strategies, from marketing, tool maintenance, from personal life management, time management, and planting, and and they got to adapt to every season. Every season is different, so every financial season is different. Every political background season is different. So we are evolving, and we're continuously learning and educating, and we got to teach other people how to be purposeful as well. So let's take it then to the quote of the day. This is one of my favorites, and it comes from the book. Oh, I didn't bring it. I was going to show it to you. Becoming Your Own Banker. So you finance everything you buy. You either pay interest to someone else or you give up the interest you could have earned. There is no exception. This is Nelson Nash. If you don't know him, he wrote the book Becoming Your Own Banker. He was an insurance broker that figured out a way to leverage. Well, actually, he didn't figure it out. The Rockefellers did that before he even lived on this planet. And so the way was because insurance has been around for more than banks have been around. And what insurance does, it prevents the loss of shipments. Well, that's how it was first built. But let's take it the loss of products by diluting the risk throughout different companies. So everybody gets their own insurance. Everybody pitches in, and if somebody loses, they get compensated by the whole, by the co-op, by the insurance company. And so um, this was generated um, because it's not like the financing structure that it's behind this quote. It's actually the concept of recuperating that interest. Who's that interest going to? You want to find a bank, or do you want to find your own bank? Um, and this is actually uh, very connecting with what we talked about last week about bad debt and versus good debt and how these two can cause different types of stress. So this tool is not like for uh, for people that are trying to get rich. It's just for people that are trying to stabilize their wealth, right, and protect their incomes. So what is the infinite banking? Okay, so the infinite banking is just a strategic uh, use of participating whole life insurance policy, designed primarily for cash value growth, and you can have access to capital. Okay, so for people that don't know, there's different types of insurance, and we talked about it in different shows. So if you want to know more, just watch a couple of episodes backs. We were talking about the difference between term and permanent life insurance. So what permanent life insurance is, you pay a premium until a certain set date. You can set different dates, but let's talk about the one that it's you pay until you're 100 years old. Okay, we all wish to get there in good health. So let's say you pay a premium, and every year that premium goes towards the protection of you passing away. So a certain death benefit is given to your family, and also it compounds a cash value. So this cash value grows inside the policy. And what is this cash value? It's the non-used component of the permanent whole life that is related. So there's two components in a whole life insurance. There is the one component which pays for the mortality, for uh, the risk of dying in that year of your life. So and that goes so that risk, as you can see it will increase over time, right? Like if you're 20 years old, the risk of dying is very low. So the component that comes off the permanent premium, it's very small. So the other section, like the other money, let's say $100, so say $2 go towards the component of protecting that risk. Say $98 go towards your cash value. So what does the cash value do? Well, the cash value, because it's a participating policy, is put into a pool of money where the insurance company that you have the contracts with directs it in investments to pay for other people's loans. So the money is put to work. So it's like, imagine having this uh, huge pool of cash, and then the insurance company's role is actually to become profitable, right? So the first thing where they invest that money is into loans, because they're stable, they're guaranteed through other policies because there's contracts in place with other users, and then they also put it they spread the risk. It's like having a portfolio investment, right? Like they spread the risk and they go high investment, so they get high returns. And so having that cash value inside the pool, the company, the insurance company, gives you something back. Okay. Oh, I forgot to add the slide. So yes, we're infinite banking for farmers. So, and in that sense, you get a dividend back, and the dividend pays your cash value. So your cash value now is growing through that dividend. Okay, so every year, the permanent life insurance is a yearly premium or monthly premium, but you know it's stable. It's always the same throughout the time that you get the policy to the time of 100 years old. There's 90 years old. There's 75. There's different uh, cash approaches, like depending on your income. Usually, in Canada here, we are expected to live to go into pension until the age of 65. So if you plan to retire at 65 and you don't want to fund the policy anymore, we can structure the policy so that at 65 it will be able to pay it from its for itself, right? And so then, having that structure, then you have the foresight to actually see where your payments are going, right? And so, and another benefits of these policy, which is the biggest benefits, because that's how you can construct this banking system, is about uh, the policy loans. So what are policy loans? Policy loans are now, you have constructed, let's go back to the example of $100, right, in your policy. So $92 went towards your cash value. Now the policy loan, because you have this money in the pool, allows you to borrow against that $92. Okay. So, and there is a ratio, it varies for different companies, but let's say you get 80% of that $92. So I don't have a calculator on me, but 92, 80%, it's probably around $78. Okay. Now you can borrow $78 from your own policy with no questions asked, nothing, and obviously you pay an interest, but the interest is just slightly above your dividend, and you are controlling the recuperation of the interest, because guess what? That interest is not going to the bank; it's going back into your system, right? And so that is the biggest part. And plus, these loans are taxed free. Okay, so there's no taxes on policy loans. And the important thing is to create, um, but visualize it as long term. This is long term. You got to accumulate that cash value. You can't just accumulate that cash value over a year. It takes years. Like when I first started up, I planned to grow my cash value in 10 years. I've been doing this for 3 years now, and I have created quite the substantial cash value. So, and I'm seeing it to grow. And then, like everybody knows, in financing, the greatest tool is the compounding effect, right? As you can compound your cash, that growth will be. Oh, and then the other part too, that these policy loans don't affect your investment portion. So that dividend is still based on your cash value. It doesn't matter how much you took out as a policy loan, that cash value is still growing and compounding. So that's huge. And um, now I forgot to put the disclaimer. These are all my opinions. They're based on personal experience with the system that I've used in my financial journey. I am also a realtor, so I do not give advice without take this advice as just it's just a knowledge base. It's just educational purposes, and not to say what is right or wrong. And then every single person has a personal experience, and so individual plans and personalized plans are are unique to your situation. So I'm not saying that everybody should be using this system. This is a system, something that you could try and use it in your world, right? I'm not saying that this is a like a easy way out or easy thing to do. I'm just saying that every time you come across something and new information, just do the research. And then also, if you need advice, please just feel free to give me a call. My contact information is just down below. You can reach me at those two email addresses as they're scrolling on the screen. Okay, let's go back. A stock. This is not a stock market investment. The policies uh, owners are not guaranteed by the policy underwriters that they're going to receive a dividend. But there's to say that there's 120 years history of them providing a dividend. So it's not a guarantee. And nobody give you guarantees, but don't take it as a stock market investment. Okay. And then it's not a get rich quick strategy. This is a compounding strategy, as Nelson Nash says it. This is like you're planting a tree, and you're probably not going to even sit under the shade of the tree. Um, and I like that analogy because it's like it's not truly for yourself. I mean, you can benefit, obviously, like in the first quote, everything benefits from creating from a liability an asset, and you can use it now. So that's the beautiful part about this type of life insurance, that it helps you create and sustain a wealthy habit here now instead of the future. Because term insurance, you just buy it, and when that day comes, your family will benefit from it. But this one, your family benefits from it as you capitalize and grow your cash value, right? With policy loans, and then obviously everybody needs something. As in farmers, we need so much stuff. We need to prepare for the seeding. We need the soil preparations. We need the tools like tractors, tillers, rock covers, you name it, greenhouses, everything like that. So imagine if you can just recuperate everything instead of like saving it up for a future and investing it, which has its benefits depending on your debt tolerance ratio. But again, like if you can leverage the now for the future, then why not use these tools that are available? Because everybody else is using them. You know, rich people are using them. So you want to stay at the top of the competition. You don't like I was a contractor for a while. I'm not going to use a handsaw because I don't want to use electricity and I want to keep a healthy environment, because the next guy over, he's using a skill saw and he's cutting wood way faster than I am. So there is that sense that we have to learn the tools, right? And to be in this world. And that's why, you know, debt is so important, because it can be good and you can leverage and you can grow your wealth and your net worth. And if you take on bad debt, well, then that it's good for somebody else, right? This is also not a tax loophole or tax replacement strategy. And I'm not saying to just quit your bank now. Uh, we still need them. We still need them for a few different services. But I'm just saying is that if you do something anyways, why not do it through your own system? And it doesn't take too much uh, to really understand this concept, right? And so yeah, I just didn't want to left you anything, but yeah, pretty much that summarizes what the banking system is. The infinite banking system is not, and I for my personal opinion, I believe that everybody should know, not use it, should know about the system. So if you're hearing it right now today, just go and research. And next week or down in the link below, I'll give you the link to the book. And what I suggest for people to do, the first thing to do is go get the book, Becoming Your Own Banker by Nelson Nash. It's a black book with a vault sort of looking thing. And that book is such an easy read, and I read it in like a day. I just couldn't put it down because it was just too. It was simple, and when things are simple, they're easy to comprehend. And it was simple to read and simple to understand because it has the full on label examples of like how you can implement it into. He was using the example of a logging business, but you can implement it into anything. If you wanted to buy a car, right? Like you get a loan from the car company, and usually those loans are like 8 to 10% interest. While you can have the same thing set up in your own banking system, your cash value is still growing while you're paying the loan off at the same rate. And here comes the big one. You have to be disciplined to be using this system. And this system is not for everyone. Definitely not. If you're frivolous and if you have money in your pocket and you just want to go spend it, this is not the system for you because it won't be able to sustain that habit. So you have to create like good money habits. And that is why I did in the previous shows, I did the money habit and understanding where your money concept and ideas are coming from. How do you act when you receive money, when you give money? And so once you understand that, then you can just develop like a correction of how to move forward and how the system really works and an understanding, right? And and so okay, let's go to a practical example just to make you understand a little bit more of how this system works and in comparison. So I'm just gonna so yeah, we're gonna take a look at the two different paths of what would happen if you financed a tractor, so to speak. Tractors, yeah, they probably range from 70 grand to 150. So this one will be pretty big tractor. It can probably have, a few horsepowers in there. So we're going to go and take a look at what $150,000 tractor, how does it compare with a traditional bank loan compared to your internal banking system? And I just want to show you, I'm just going to tell you what I want to do with this example. I want to show you what what's the amount of interest that you're going to recuperate. Simple. And that interest, instead of going to the company and funding their revenues, um, it's it's going to fund your revenue, and then you're able to grow your cash value more and more. And if you take advantage of the compounding concept, it just grows until you can actually finance land and so on and so forth. Okay, so I'm just going to share here this screen. Oh, I gotta run. This one, 8. Okay. I hope you can see this. And if you're listening to this on Spotify, I'm just going to run through it. So, traditional bank loan versus internal banking system comparison. Okay. So, we said $150,000 is the purchase. The Let's assume the traditional bank rate interest is 7%, and that's very low. If you get that, that's a good loan. Um, the loan term is 5 years. Okay, so if we go through the traditional banking system, we have 150,000, interest is 7. So approximate amount of total interest paid over the 5 years is $20,000 to $30,000. So the cash flow outflow approximately now it's 178,000 minimum. Okay. So that is money that is completely gone. Okay. So the interest leaves the farm permanently. That's not recollected. The loan appears as a liability because on the balance sheet, you got this, it goes out. It's money flowing out of your hands. Okay. You're producing out there on the farm, and this money is flowing out. Loans appears as an asset to the balance sheet, to the bank's balance sheet. How come is that? Well, because they're receiving, right? They went and asked for the money to give you from the bank of the World Bank, and they printed the money for that loan because hey, you promised to pay it back. So they're printing the money back, the loan of 150. So they got the 150. Now they give it to you because you gave the collateral, promise to pay, and then they're collecting the interest because they were the middleman that was trying to say, "Hey, I connected you with the money print, and now here you go. I give you the money." So it's an asset for them. You're paying interest. That interest is their asset. It's coming in. So the repayment schedule is controlled by the bank. That's another big one. Um, Obviously, we're used to it, but when you go to the bank, they tell you, "Hey, you got to repay this loan, this much a month, and this." But you being your own banker, you have the flexibility. But we'll talk about it in this. I'm just so passionate that I just wanted you to see this. Um, there is no, you're not recuperating, you're not growing your capital anymore. And this line is very good. So capital, it exits the farm, period. Okay. The financial ecosystem. So it's gone. It's out. You can't recuperate it. Okay. So option two, the internal banking system. And then let's emphasize the fact that after proper capitalization, it's not that you're going to start this banking system and all of a sudden you are going to have 150,000 to borrow. No, 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 no. This is not it. These systems are tailored for what you can afford. At the beginning, it's like you got to build that pool of money that you can borrow against, right? So you got to fill it in with your juice, right? Like you got to fill it in with your money and cash flow money into it. And capitalizing means to have to have your own vault that you can borrow from. Okay, just like a bank, right? They need the depository system, so they mark it out to people. Hey, come and deposit your money here. We'll protect it. We'll keep it safe. We'll give minimal interest back to you. Maybe you pay more on fees, but that's another topic. So after capitalization, proper capitalization, you still have policy cash values has to be 150 plus because of that 80% loan ratio to capital, and then you taking the loan against the policy of 150. Now, the insurance company lends you that money. Okay, that money is free and clear from any other. The insurance money has that vault, that pool of money that everybody's investing in it. That's it. They can't loan any more than what they have in the pool. Okay. They're not printing money. They're loaning what's in the pool. And printing money, that's what causes inflation. But that's, again, another topic. So the cash value that you have and you're borrowing against is still compounding interest. Okay. Every year, the insurance policy says this is the dividend that we're going to pay for the year, this year. So they tell you before the year starts. And so far, I've been having similar interest compounding, and it's around 6+%. Okay. Um, and it's been going on for 3 years. Personal experience, I've seen it, I've done it. Okay. Now, the loan repayment schedule is flexible. It's up to you. Farmers, I mean, this is so critical. We have an income that comes from around April. That's when we start seeing the first products until, say, October. And if we preserve, probably we can go into December. But there's these 3 months that we're like, we can't pay stuff back. So what do we do? What do we do? Well, now there's the mortgage payment's still going, the tractor payment's still going. Oh, guess what? We got to buy seeds. We can create a system because the bank will always want their money, and if you don't give them their money, they'll come and take your equipment that is generating you the revenue. So, but with this, you can design it yourself. You can pay more in the production days and increase that, and then you can pay less or nothing because you taken it out in the 9 month schedule. So you can make a 9 month schedule payment uh, schedule. You can flex it as much as you want. And you have a dry year, don't pay it. You don't have to pay it. Just pay the interests. Okay, this is huge. This is huge. Okay, because of that flexibility, there is less stress. If there is less stress, you can focus more on your farm practices, your life in that sense. And again, this is not for everyone because if you're get stressed under that, it depends. It depends on how you handle it being your own banker. Um, the cash value continues growing, uninterrupted, unstopped. The capital remains within your financial system. You take that cash from production, from your income, put it back into your own bank. It's not going anywhere. It's staying there. Okay. The interest paid, this is the part, the big one. Interest paid supports policy performance rather than leaving your ecosystem. So you're paying the interest. Obviously, yeah, you're charged interest by the insurance company. Again, disclaimer, you are charged interest. But if you pay just a little bit more of that interest, just it usually is, I'm not lying, it usually is what less than what the bank is giving you. So why not take advantage of that, right? And pay just the same as you would at the bank, and then that capital is going to go straight into your cash value. It's going to grow it and shoot it up to the sky. And I didn't even talk about the debt benefit yet. Okay, so capital flow become internally controlled rather than externally extracted. This, again, it's a long-term strategic difference. Traditional banking model, interest payments exit the farm. They leave. Okay, it's money out of your pocket. This way, it goes back into your banking system. You pay those loans back, your insurance company is doing well. Guess what they were going to do? They're going to give you more money on your money that you invested. And your cash value continues to grow unstopped. That's why I'm saying this system, this is so simple. Like I don't have to create like an insane report or paper. Capital remains collateralized. Like you can you like I've become this strategy that I start off with a loan, 150,000. Let's say you have to make $1,000 payments. What would that be? No, it would be $2,000 payments, and you got to put it back into your bank, right? Guess what? Now you have another $2,000 to borrow for another thing, and then you set up payments the same way. So you're continuously borrowing and putting it in, borrowing and putting it in, but you're continuously recuperating that interest and it goes back to your policy. I mean, if that isn't just an amazing system, I don't know what it is, right? So I hope that was clear. I mean, if you're watching this and you're not too clear, leave a comment. I don't know if I can see because I'm doing this live on LinkedIn, so I don't know if I can see other platforms, but I do uh, go on Facebook and YouTube. But if you're seeing this later and you have to take some time to really understand it, like my first thing is go read the book and Nelson Nash, Becoming Your Own Banker. Then watch this video, and then if you don't understand it still, we can sit down or you can comment because the more comments, the more I can explain it to other people the way they need to hear it, right? And so it helps me, it helps us, it helps everybody, and spread the video too, because this is when I talk about this with other people, they're just like, "No way, it can't be," and I'm telling you, it can. So um, this is like a huge, huge. When I was reading the book, I had to read this the second time because I'm involved in a mastermind up in Kelowna, and the guy was asking because I'm in real estate. The guy was asking, "Is your house that you live in a liability or an asset?" And then I thought about it. I was like, "Well, you pay a mortgage on it. It's not producing anything. Oh, it's a liability. Okay, so it's a liability because you're paying the bank. What if you could borrow against your life policy? Then what does it become? Oh, an asset because you own the bank. So the bank sees all the policy loans. Hey, people, think about this. What are we? This is February 25th. Okay. On the 2nd of March, that's RRSP season. So what's RSPs? Well, it's a way to reduce your taxes to the government. Ooh, thank you. It's a program or a vehicle that the government has given us so that you can save your money for retirement because the government doesn't want to pay for your retirement. You have to pay for your retirement. You give them all this money all your life in income tax, and then all of a sudden they're like, no, you pay for it. Anyways, different topic, another one. Um, so RSP season is coming in. So the banks or any financial institution has a lot of money. What do you think they do? You think they keep it into a savings account like you do? Or do you think they loan it out or they invest it into companies, stocks, equities, gold, or what have you? They invest it. So wouldn't it be the same thing to instead of you investing it into something that benefits the banks, to invest it in something that benefits you? Hmm. That's that's a question. I don't know. I have the answer. I just don't want to give you the answer. You got to give me your answer. I want to know what you think. Um, with this system, like I said before, I need to say it again. It's I don't want to eliminate the banks. Maybe I'm gonna get red flag, black flagged, whatever it is. I don't want to eliminate the banks. I think there's still a role for banks, but I just want to think like, what if you have a little bit more control? Like we're all scrambling. I mean, like last week we talked about the average Canadian as $23,000 in debt. $23,000 in debt. If you think about, man, I should have brought my calculator. If you think about the interest, so 20%, that's $4,000 in interest a year that he's paying or that? Don't we have enough with the income tax to pay 40% of that? Uh, I mean, like, how are people gonna get out? Huh? Well, maybe it's because of that reason that um, what was I gonna say? It's that reason that the banks have control because you just can't get out of it. You know, they call it the rat race, right? For a reason. You just can't get out of the hamster wheel. The more you put in, the more that wheel spins, right? Like if you can think about the absorption of energy, that is taxes, right? Like the more you produce, the higher the tax bracket. Like, how does that make any sense? Don't we want a productive society? Don't we want to benefit productions and incentivize, right? Like, and so this is huge. If you could change just little pieces like this fact about changing liability into an asset and taking control of one little portion of what happens in your life, and it's tax free, wouldn't you want to at least learn more about it? It's not, I mean, what am I? You know, I'm a farmer, former farmer, realtor, construction guy. You know, you're just hearing me on YouTube and you go, "Oh, this guy's crazy." No, I don't think that's true. He's just bullshit. Well, whatever. Go check it out. Go check it out for yourself. I mean, this is huge. And also like what I want to mention as well is this. Why why do you want to control it? Okay? I'm not going to go into politics or I'm just going to explain what actually happens shortly. I hope I can be very very fast. Okay, you deposit your money in the bank. Okay? Now the bank expands that credit. And how do I say that? The bank is allowed, I'm not going to say the number of how many times, but the bank is going to receive your money, takes it in, and then is going to go, okay, I got this much in deposit. I'm going to lend it out. They don't lend it out straight out, cash for cash in, cash for cash out. No, they lend it and expand it uh, in the sense that, oh, they give you more credit, like a credit card company, right? They do a little bit of a research on your credit score, and then they're like, okay, here's 20,000. Where's that 20,000 coming from? You didn't give them anything, but they gave you something. You gave them the promise and the discipline that you will repay at whatever. And when you sign that contract, it's right in there, 19% contract, right? And so the bank is expanding credit on your future self. Get this, on your future self, the future production that you're going to do, not the current production, the future production. And this is huge um, because this, what it does, it increases the money supply. Now it increases it because they print more money. Okay, they have $1,000 in deposits. Let's say they lend out at 10 times. Don't 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 correct me. Let's not start an issue there. But let's stand out. They lend at $10,000. Okay, so they just printed $9,000 out of 1,000 that you deposited. Do you think that those $9,000 now are just worth the same? If there is more money in circulation and people go and spend more and they increase the demand, do you think that the because the supply stays the same, the demand increases, what happens to the prices? They go up. Hello, that's inflation. Inflation is caused by the money supplies increasing. Okay? I mean, there's different factors and there's different experts, but in simple terms, at the end of the day, and again, this is just a disclaimer again, I am just giving advice for the educational purposes. This is not what's happening. Go research yourself, but I just want to just create a little bit of a picture here of what we're doing. So as prices go up, as the money supplies goes up and the prices go up, what does it happen to your equipment cost? Then what happens to the fuel cost? What happens to your input costs? They go up. So some people can stand it, like bigger farms can stand it because the reduced profit margins, they can be handled by the bigger production states. So that all the small farmers, they can't. And that is huge because what worked then can't work now, right? Because the system has changed. Back in the days, the depositories were backed by gold. So there was only a limited amount supply of money. Now it's unlimited. There's no regulations. They have changed it. The people that are in control have changed it. They're laughing all the way to their banks, so to speak. Anyways, insurance companies, when you put that money in, that's it. They can only lend what they have in place. They don't increase or deflate the money supply. They are not responsible for inventory. What I'm saying is, if you put save money and you capitalize your money in your own bank, you're not increasing the cost of goods. You're not increasing the cost. You are actually becoming the solution to the problems that we are now facing. And then, like uh, the saying, more money, more problems. No, why did that pop in my head? I'm just saying, more money, more problems. Yeah, we have more the increased cash values. I mean, the money supply out there, the more problems we have, right? So let's take it back. Let's start creating our own banking systems. And it's not that hard. Yes, it takes discipline, but now we have tools like ChatGPT. I can even create becoming your own. Actually, that's an idea. I'm going to create becoming your own banker app, like your own self controlled app that says and questions the loans and gives you an idea of how to leverage, and it gives you progress on your capitalization and your finding and everything like that, everything requires a strategy, right? So you got to fund it properly, have a span of 5, 10 years, whatever it is. You got to have patience because once it's in there, and this comes from personal experience, is like, oh my god, it's not growing that fast. Like I remember my first year of interest was like $200, I think, and then second year almost doubled, and now I'm on my third year, so in April I'll get to see what's it like. But again, it's like uh, being consistent and being within yourself and not getting and having that emotional discipline, right? Like not overspending and be able to, okay, sit down, oh, I can take this loan out and fund whatever I'm doing. Like I'm spending a lot of money now on educating myself, reading books, and understanding how the system works so that I can properly help other people. That's all I'm doing it for. There's no way you can take shortcuts in this one. Mm, there's a couple of shortcuts, but obviously we can talk about them. I don't want to advertise them here on now. Uh, okay, so now let's go to the next stage that we didn't even talk about. This is just the banking system. Now, now this is the cherry on top, as Nelson Nash says. We didn't even talk about succession, legacy. When these permanent life policies mature, okay, so I'm planning to live past 100. Okay. So at 100 years old, guess what? You get paid. You get all that money. It becomes yours. They promise you that money. They grew it in their own vaults, and it's yours. You take it. Or if you were to pass before that, they give it to your family or whoever you name beneficiary. You're donating it to like a Nature Trust Foundation or any foundation that you are connected with. You want to help children in Venezuela. You want to help, I don't know, whatever, animals or anything that fits what you want to leave. That's it. That's your legacy. So, and we didn't even talk about it that way. And that money comes into whoever you donated to tax free. What? It's like winning the lottery, but it's even better because if you don't educate other people about this, it would be like winning the lottery. And I'm talking about if you don't talk to your kids about it, if you don't talk to people about it, just having a conversation instead of talking about the game, talk about your becoming your own banking system. And like we talked about it 3 shows ago, and where it was like, how did you get into the money concept? What was the first thing? Oh well, it was opening a bank account. Well, what if you just opened a bank account for your children, right? And that's my next goal is your children. And then what? Well, then you're making all this money. Then you can finance your grandchildren. And then if you live to 100, your great grandchildren. And talk about legacy. Talk about, I was at one of these financial shows. The guy had put enough money away for his great great grandchildren to be able to get married, and they would have half of their house. The wedding would be paid for. Half their house would be loaned out to them. He created this trust, and and he was covered. That money was compounding and growing and continuously compounding, and they had life policies on each other, and just like explodes. And you can live a life, right? You can live a life and do what you're passionate about instead of like um, what keeps the hamster wheel going or the rat wheel. So, and it's immediate. The life insurance company pays out within 2 weeks, so you can pay off all the loans. Oh, and that's the other part too. All the loans that are outstanding are paid for. Let that sink in. Imagine, for whatever reason, you had a tractor accident, which happened to one of my uncles. You have a tractor accident, and you had loans on your car. You had loans on your tractor, and he dies, and then the income stops because he was the only one working on the farm. And now you're trying to recuperate. You're trying to fit like, okay, I got to make some money. I'm going to use the tools, but you don't have the same skills. You don't have the same knowledge. You don't know how to use it. And the bank is like, well, we got to close on this because, probate passed by and it's been a year. You haven't done a loan payment. What did they do? They repo your tractor. They take it away. With this system, the tractor is yours. It's paid for. Nothing to worry about. Like, that's insane. Anyways, I don't know if you're not seeing what I'm seeing. Um, come and talk to me. Ask me questions because this is huge. You're stabilizing your estate too. Like succession. All those taxes that you pay on your property. Well, I hope you haven't experienced yet, but if you did, anybody that experienced probate, it's probably the worst uh, part of the transition process, and it's just the fees and the legal documents and the time it takes. If you don't have patience, man, probate will kill you. You know, like as in stress. And then, hey, look, my land is protected. Look at my children. They're gonna get all my properties tax free. All they have to do is maintain that tax. the property taxes, right? The expenses for maintaining it. But if they're income generating, they're good debts, then they're winning, right? So that's a huge part, but it's not the main component. The death benefit, it's just like the cherry on top. It just prevents it continues the legacy without doing anything. Because like what we said at the beginning with the quote is the fact that this is your own bank and you're recuperating your interest that you would be paying anyways. Okay? You'd be paying that interest anyways. So it's like, why not use this tool? Right? It protects the farm for the next generations. It's an amazing tool. Anyways, okay. So that leaves it to the closing. I hope I was able to make you understand. I mean, this concept I could have 15 shows and I'll never end talking about the benefits of it. And I'll probably do one more or two more this year. Um, but what I want you to understand is that we live in a system that leverages debt, and that we talked about it last week. And in order to live and become comfortable in this system, we need to understand how to leverage debt, right? And if it's not for our benefits, it's for our children benefits. And this is to all the farmers out there. And this is why I do this show because and and this is why I started the Farmers in Finance website. Uh, it's because I feel like farmers are doing so much for society that nobody gives them anything. Like they do it because out of aspiration, out of honor. They don't do it for the money. It's like nobody's gonna start a farm for making $1 million, you know, and eventually they will because it's an essential service, and we saw it during the tough times. The farmers are the ones that are resilient. They're like, well, oh, another pandemic or pandemic or whatever, and they'll survive. They got food, they got water, they got land. You know, Mm, hopefully the government doesn't take it away, but uh, just just leave you with that. And that brings me to the last. I'm going to put in a closing quote too. A society grows great when old men plant trees in whose shade they know they shall never sit. I'll repeat that again. A society grows great when old men plant trees in whose shade they know they shall never sit. That's a Greek proverb, and it's just about thinking about the future, the benefits that your children will have from it. Or they don't have to be your children, just other people, right? Like plant a tree now for the future. And again, that goes back to planting 2 million trees foundation starting up soon. If you don't know what I'm talking about, go watch one of my past shows. So if you want to explore this process in more an individualistic way, just give me a call. My phone number is 236-457-4230, and or give me an email, and then we can talk about more about this strategy. Before I put a strategy like this is another disclaimer. Before I put a strategy like this in place, I give you a free finance evaluation where we go through all of your debt and liabilities and assets, and then your income, and then we create a plan on how to achieve financial freedom. So if you haven't tuned in yet, I also have a channel. It's called Financial Freedom with Rico. I'm Rico. And please subscribe over there. It helps me grow the channel, and it helps me bring more materials like this and educate people around the world and free them up. Freedom is a concept. It's a domain, and you're not free until everyone is free. So that is my goal: is to get everybody free. Get out of jail cards, as in the Monopoly game. So uh, I want you to understand this concept, and before you dismiss it, every time you get presented truth, it's always put on the in the back of your mind, and you're just no, it's not possible. I did that. Everyone does that. Everyone that I've told this to, they first go, "Oh, that sounds interesting," and then when they explore, they're like, "Yeah, I don't know." But it's a huge concept. You got to practice it, and then you can preach it, and then you move on. Anyways, thank you for tuning in. Thank you for watching this all the way to the end. I know I babbled on for a long time. I hope to that this was a resource for you, and then you can create your own banking system. And if you have any questions, subscribe, give a comment, and we'll see you next week, same time, same place, and for more financial knowledge. Until then, I am Rico with Farmers in Finance. Check out my website, farmersinfinance.com. Have a great day. Talk soon. All the best to you all out